Hi friends, I have made a watch list based on 30th of August delivery data. I follow delivery data analysis than following technical or fundamental analysis. However, I follow fundamental conditions. 12 fundamental conditions I consider while making a watch list. These companies which we are going to discuss here is not for buying it. It is for study purpose only. My background is not related to financial sector, but I play with delivery or many data, and in market analysis I consider delivery data as one of the most powerful thing. So based on these 12 fundamentals, I can pick companies for my watch list. Earning per share should be more than zero. If you look into the market, the companies which people discuss, or many companies which are hitting upper circuit and all those things, hot cakes, you will find that there are hardly any earning per share for that. So I consider earning per share should be more than zero. Price to earning ratio, that is the current market price by EPS, that should be more than zero. Then you will find all these companies, and then next condition also, sales quarter should be greater than zero. Many companies which are being discussed in public, or many people try to do trading, will not have all these three values. EPS will not be there, PE ratio will not be there. Even the companies which are not doing any business also are there available in the market for trading. So I don't consider, in my way of understanding, a company which is not doing any business should not be considered for an investment. So that is why that condition I have put. Year on year sales growth should be more than 0%. That means year on year basis, the company should be able to push more products into the market. That company should be able to penetrate into the customers. Customers should be able to buy more product, or more and more customers should come to the company for buying it. So that is a growing company to my consideration. Then fifth condition is net profit quarter should be more than zero. If any business, they should be able to create some surplus. If you have to progress, you have to create some surplus. That is the reason why I don't try to invest in companies which are making losses. Even if any company is making a loss in my portfolio, I used to sell it. Even at loss also, I will be selling it, because the company has to create money for running the company, running the functions, salaries, raw material, other transportation, and other many commitments they will be having. And the company already is in loss, may not be able to create more and more products, or they may not be able to reach to the customer the way they should, the business should grow. Okay, year on year net profit quarter should be greater than -10%. Many a times what happens is that the money get stuck up. Sometimes they do sales is more, but they are unable to collect the money from the customer. It is a negative thing, but sometimes in a quarter there may be problem with the customer may not be able to provide the money. Otherwise, sometimes what will happen is that the company will be infusing money for the expansion from the profit created. So still I consider that if the net profit growth is not less than -10%, it can be considered for investment. Then promoter pledging, and this is a general observation. I have seen that many companies which go for pledging, promoter pledging, end up in a financial problem, and the company creates the problem starts from that end. So, but however, in many cases like TCS also I have seen 0.1%, 0.9% pledging. So I don't want to leave those companies. So I have kept it as at least it should not be more than 10% of the promoter holding should not be pledged. Then unpledged promoter holding should be more than 30%. Promoters are the people who are understanding the dynamics of the business. So at least some percentage of holding they should have. Definitely, if you are familiar to market, you may have issue with this 30%. Some people insist for more than 50%. Some people may say Infosys is having only 16 or some percentage of it. That is an investable company. Definitely, but when I am looking into the entire market on the basis of my own database, I have put this condition as at least 30% of the holding should be with the promoters. Then change in promoter holding during the previous quarter should be greater than or equal to 0. That means promoters should not be selling their holding stake during the previous quarter. Then debt equity ratio should be 0 to 1. There is a problem with this ratio considering 0 to 1. Because of this I will not be able to pick anything from financial sector. It is not that it is a wrong thing to invest in the financial sector, but I am looking into the market with the entire market data. So I have kept as an ideal for me. So next is current ratio, that is current asset divided by current liability. It should be more than 1. That means asset is more than the liability, current liability I am talking about. Then return on capital employed should be more than 10%. These 12 fundamental conditions are not ideal for this thing, selecting a company. However, with my understanding on the market, I have kept it. And if you are familiar with my background, you will be able to understand whether it is working or not. Okay. So first company which I have kept in my watch list, I am holding also to some small quantity only. I am not a big investor. I keep buying things in small quantity, which I feel in delivery data analysis, if it is giving a good background. I consider it as investable. Okay, this company is in the Narayana Hrudayalaya, is hospital, is into hospital business. It was closed at 1268.95. You have on the screen, if you pause, you will find many values on the trading data, that is 1 week average, 1 month average, 3 month average and 1 year average. I look into the strength of this delivery value. Delivery value means delivery turnover, how much money, this is the turnover for how much money it was traded and for how much money the delivery happened. Then delivery percentage is also criteria for me. Then average trade worth. The average trade worth is nothing but turnover divided by number of trades. So I find that it's a good measure for finding out whether the smart money is coming or not. I mean, if more quantity per trade is happening, average quantity per trade is happening, that means if it is in the increasing trend, there is a demand for it. Okay, you can find all those things in these values, and fundamental data also with the June result, quarterly result. PE is 32%, then EPS is 38.62. Many values you will be able to see in this. So then technical analysis point of view, what is RSI, how much is the RSI, ADX, and all those things you can see. This is my delivery data chart which I have created. It is the green bars seen on the bottom are the delivery turnover, for how much money delivery happened, and here at the bottom you will find in brown color average of delivery percentage for the year and delivery percentage of every day. Here this is average trade worth. Average trade worth means if you see here so there was a huge buying during this with a higher delivery percentage and average trade worth, and that also with a very high delivery turnover. So the share which was traded on that particular day was bought in huge quantities by some big player. That is the indication which we get from this chart. It's a candlestick chart also. If those who are following technical analysis can look at what are the resistance. I keep normally green line for the expected support and red for the expected resistances. It is not mandatory that it will happen. It depends upon that particular day's trade. This chart was or bar chart was created on the basis of some calculations. Company's market cap to industry market cap. In hospital business, this company is having 6.94% of the entire hospital business market cap, and they are able to do 8.83% of the business. Means it is more than what the market cap is, and they are holding 9.59% of the industry's debt. But rest of the things were available in the previous first screenshot, so I am not discussing about all these values. You can pause and see. Here another comparison I have done with what are the major companies available in the hospital industry. Apollo Hospital is a competitor for them. Likewise, so until unless you consider the first screens, whether it is meeting or I am talking about my consideration. Until unless these companies meet 12 fundamental conditions, I don't consider them, as I said. Then why I have created this chart is that many companies which do very less business are available in the market, but their market cap is already that has grown much more than they are doing the business. For example, Max Health is having acquired 22% of the entire market cap, but they are doing only 10% of the business. So for understanding that only, it's not mandatory that you have to follow this. Just I am mentioning why I have given it in my screen. Next is Jyoti CNC automation in industrial product. This also technical data is not available. That is why that screen is the technical data screen is not available. Rest of the things are available here. You can have a comparison of all those things. This is the technical chart available. Technical delivery chart available. This has grown. 46% of the entire market cap is held by Jyoti CNC, but company is doing only 18% of the business. Okay. Then next is Tata Consumer. Tata Consumer is in the tea and coffee. Next is UCAN, compressors and pump. Sanduma, industrial material minerals. Sundar Sandur Manganese and Iron Ores Limited. Since the company had a share split or bonus, my chart is having a problem. That is why I kept charting this. So you can always look into the other charts available in the social, in the public domain. You can have your own technical analysis on the basis of this. I have given this also because there is a bonus or dividend split happened. So my chart is not explaining how much is the current trend of this. But delivery percentage improvement and delivery turnover improvement you can find from it. Then Medanta Hospital Business, Global Health, that company's name was Global Health. Then next is Hotel and Resort Industry, EIH Hotel. Sundaram Fasteners, fastener business, they are into fastener business. You can always pause and see what are the values available on this. Zydus Life, pharmaceutical business. Heritage Food, dairy products, they are into that dairy product business. The quarterly result was quite good. Their year-on-year profit variation was 249%. This is the chart. There was improvement in the price just before quarterly results were announced. Then signed DLM, industrial products. They also had a very good result, quarterly result. 99% year-on-year profit variation, 18% sales variation. Lokesh Machine, that is in the industrial equipment category. Technically, it is in the weaker condition only. RSI is at oversold condition. This is the delivery chart. If you look at this, see delivery percentage, even though the prices are coming down, delivery percentage is quite above the average, and average trade worth is also quite higher than, in my consideration, these are the places where the big shots try to accumulate the prices. Without price movement, they are able to acquire more and more quantity. That is why I considered it. Thank you very much.